Monday morning, what a better way to start the week than with a little ETF extra, some exchange-traded fun. Mark Cortazzo, founder of Marco Consulting Group. Or is it Macro? It went by so fast, I don't remember.
It's
Chris
Macro.
Hobart. Is it Macro?
It is.
Okay. Chris Hobart, CEO and founder of Hobart Financial Group. Mark, I'll start with you since I mispronounced your company's name. Where should we be looking in ETF land these days?
Well, we really like the mid-cap space. If you look at the past 4 years, mid-caps outperform by double digits large-cap stocks 3 of the 4 years, and the 1 year that they didn't, they were basically a tie. So very good risk-reward metrics there, and that's not just recent. Go back the past 20 years, 30 years, the numbers look very similar. So
okay, so we've got something, IQ Hedge.
That is a
hedge tracker?
Yeah, the hedge tracker is a
macro tracker. What is that?
It is simulates a hedge fund, much more transparency, much lower cost, very low correlation to the stock markets, and since its inception, it's averaged a little bit over 7%. So it's a little bit one-off play, but we like it as a good complement to portfolios.
I want to come back to that, but first let's get Chris's thoughts. Chris, what do you got for us?
Well, I'll tell you what, as we look forward, we're kind of looking at seeing the general market come off a pretty good year in 2010. And as we look at that, some of the ETFs that represent what we like to look forward to are going to be things like something tracking the S&P or the Russell 2000. You know, as we look forward, the valuation on these things on the market is still very fair right now. So we're looking forward. We don't think this next year tracking some of those major indices are going to necessarily produce the teens type results, but we can see some relatively good results coming this next year, maybe just in the mid to low single digits. But you know, companies have had a very good year. Everything we've seen has been very positive this past year. In fact, fourth quarter numbers of the 290 companies in the S&P 500 that reported their fourth quarter numbers as of last week, 236 had surpassed the prior year's earnings, which is phenomenal. In fact, 70% of them surpassed what Wall Street said. So we're looking forward to that trend continuing, maybe not quite so strong, but still continuing.
And Chris, you're to buy into that, I mean, you're buying very broad-based here. I mean, the big guys, the little guys, and the guys in the middle.
Well, exactly. You know, our clients, the folks that we represent down here are retirees, primarily people about 55 to 75. And their biggest concern isn't looking for necessarily the hottest opportunity, but right now what they're looking for is they're looking for good, solid returns in this type of economy and looking forward to taking advantage of any volatility that might happen within that. So we use a strategy that we call advance and protect, which is simply, you know, let's look at the big guys. Let's not go for anything too exciting. You know, for Valentine's Day, nothing too sexy, I guess. You know, let's go with the big guys, and when we make profits, let's keep them. And when the market starts pulling back, let's begin to protect that. We don't want people overexposed in this type of economy right now because.
I'm sorry, Chris. We're almost out of time, and I wanted to revisit with Mark this IQ Hedge macro tracker, which you said has very little correlation to the stock market. So what's it invested in?
It is designed to move in and out of markets like a hedge fund would. It tracks a macro hedge fund index. The beta is less than half of the volatility of the stock market. If I could just jump 1 point back to the equity piece. If you look at the mid-cap space, which is an area that we're overweight in and have been for a long time, every rolling 10-year period since the 70s, it's outperformed small-cap stocks, and a lot of people build their portfolios in big and small, and they neglect the mid space, which has really given much better metrics. So in the equity side, we think that's worth a look, and most people focus on the top and the bottom.
Okay, Mark, Chris, thank you both very much.
Thank you.
Thank you.